2024, a rocky start? The year began with a sense of optimism, but it quickly turned into a turbulent journey for investors and financial markets alike. The first half of 2024 has been a roller coaster ride for investors. From sudden market dips to unexpected recoveries, the financial landscape has been anything but predictable. We saw lingering inflation, geopolitical tensions, and fears of a recession. These factors have created a perfect storm of uncertainty, making it difficult for investors to navigate the choppy waters. Despite these challenges, the markets have shown resilience. Investors have had to adapt quickly, employing new strategies to mitigate risks and capitalize on fleeting opportunities. The S&P 500 is up slightly, but volatility remains high. This slight uptick has provided a glimmer of hope, yet the underlying volatility serves as a constant reminder of the market's fragility. Tech stocks initially outperformed but have cooled off recently. The technology sector, once a beacon of stability, has faced its own set of challenges, including regulatory pressures and supply chain disruptions. Energy prices, impacted by the ongoing conflict in Europe, have been a major source of inflation. The conflict has not only driven up energy costs, but also contributed to broader economic instability, affecting markets worldwide. As we move into the second half of the year, investors are cautiously optimistic, hoping for a more stable environment, but preparing for continued volatility. The lessons learned in the first half of 2024 will undoubtedly shape investment strategies moving forward, as resilience and adaptability become more crucial than ever. Stocks, bulls versus bears. The stock market has been a battleground for bulls and bears. Bulls point to strong corporate earnings and a resilient economy. Bears worry about inflation, rising interest rates, and a potential recession. Growth stocks, particularly in technology, performed well early in the year but faced headwinds as interest rates rose. Value stocks, on the other hand, have shown more resilience. Bonds, finding their footing. Bonds, often seen as a safe haven during times of uncertainty, have faced challenges in 2024. Rising interest rates have put downward pressure on bond prices. However, bonds remain an important part of a diversified portfolio. As interest rates stabilize, we could see renewed interest in the bond market. Commodities, riding the wave. Commodities have been one of the best performing asset classes in 2024. Driven by strong demand and geopolitical tensions, energy and agricultural commodities have seen significant price increases. Gold, a traditional safe haven asset, has also performed well. However, commodity prices can be volatile, and investors should be cautious. Section 5. Inflation, the persistent threat. Inflation is not just a fleeting issue. It is a persistent threat that continues to loom over the global economy. Inflation remains a major concern for investors. They are constantly on edge, analyzing data and trying to predict the next move. The uncertainty surrounding inflation can lead to volatile market conditions, making it difficult for investors to make informed decisions. While inflation has shown signs of cooling, it remains above the Federal Reserve's target. This discrepancy between actual inflation rates and the target set by the Federal Reserve creates a challenging environment for policymakers. They must balance the need to control inflation without stifling economic growth. This continued pressure could lead to more aggressive interest rate hikes. Traders are acutely aware of this possibility and react swiftly to any news that suggests a change in interest rates. These hikes can have a ripple effect, influencing everything from mortgage rates to the cost of borrowing for businesses. Consumers are feeling the pinch of higher prices, which could impact spending and economic growth. As prices rise, consumers are forced to adjust their budgets, often cutting back on non-essential purchases. This reduction in consumer spending can slow down economic growth, creating a cycle that is difficult to break. The Federal Reserve's actions to combat inflation will be crucial to watch in the second half of the year. Analysts are closely monitoring these measures, as they will play a significant role in shaping the economic landscape. The effectiveness of these actions will determine whether the economy can achieve a stable balance between growth and inflation control. Section 6. Interest rates, the Fed's dilemma. The Federal Reserve faces a delicate balancing act. They need to tame inflation without triggering a recession. The Fed has already raised interest rates several times in 2024, and further hikes are expected. The pace and magnitude of future rate hikes will depend on incoming economic data. Investors will be closely watching inflation, employment, and GDP growth for clues about the Fed's next move. Section 7. The second half. What's in store? Predicting the market is never easy, but we can identify key trends to watch. Inflation, interest rates, and geopolitical events will continue to drive market sentiment. Earnings growth will be crucial for stock market performance. Companies that can maintain strong earnings in the face of economic headwinds will be rewarded. Section 8. Navigating the market maze. Uncertainty can be unsettling for investors, but it also creates opportunities. Diversification, staying informed, and having a long-term perspective are key to navigating market volatility. Consider your investment goals, risk tolerance, and time horizon. Consult with a financial advisor to create a personalized investment plan. Section 9. Key takeaways and actionable advice. In this section, we will summarize the crucial points and provide you with actionable advice to navigate the financial markets effectively. The first half of 2024 has been a wild ride, marked by significant ups and downs in the stock market. Investors have faced a roller coaster of emotions, from the highs of unexpected gains to the lows of sudden drops, and the second half could be just as unpredictable. Market movements are influenced by a myriad of factors, making it essential to stay vigilant and adaptable. Inflation, interest rates, and geopolitical risks will continue to shape the market landscape. These elements can have profound impacts on your investments, affecting everything from stock prices to bond yields. Here's my advice: stay informed. Knowledge is your best tool in navigating these turbulent times. Regularly read financial news, follow market analyses, and understand the broader economic indicators. Keep up to date on market trends and economic data. Don't panic. Volatility is normal. It's important to remember that market fluctuations are a natural part of investing. Reacting impulsively can often lead to poor decisions. Stick to your long-term investment plan. A well-thought-out strategy should account for short-term volatility. Stay focused on your long-term goals and avoid making hasty changes based on temporary market conditions. Seek professional guidance. A financial advisor can help you make informed decisions. They can provide personalized advice tailored to your financial situation, helping you to navigate complex market conditions with confidence. Diversify your investment portfolio. Spreading your investments across different asset classes can reduce risk and improve potential returns. Consider a mix of stocks, bonds, real estate, and other investment vehicles. Regularly review and adjust your investment strategies. The market is dynamic, and your investment plan should be flexible enough to adapt to changing conditions. Periodic reviews can help you stay on track with your financial goals. Lastly, practice patience and discipline. Successful investing is a marathon, not a sprint. Stay committed to your strategy, remain patient during market downturns, and maintain discipline in your investment approach. By following these key takeaways and actionable advice, you can navigate the financial markets with greater confidence and resilience. Remember, informed and strategic decisions are the cornerstone of successful investing. Section 10. Stay informed, stay ahead. The market is constantly evolving, and staying informed is crucial for success. Subscribe to my channel for regular market updates, analysis, and actionable advice. Don't forget to like this video and share it with your fellow investors.